Right now, smart investors are buying while everyone else is panicking. The stock market feels uncertain, and for many investors, it's honestly a confusing time. You're seeing major indexes like the Nasdaq, Dow, and S&P 500 pulling back from their highs, and everywhere you look, there's fear. Headlines are dominated by global tensions, economic worries, and predictions of further downside. But here's something most people don't realize. The market doesn't reward comfort, it rewards timing and perspective. When fear is high, opportunities begin to appear. If you take a step back and really look at what's happening, you'll notice something interesting. Many of the biggest, strongest technology companies, the same companies that were leading the market not long ago, have dropped significantly in price. Some are down 30%, others 40%, and a few even close to 50% from their peak levels. Now ask yourself this, did these companies suddenly become weak overnight? In most cases, the answer is no. What changed is not the businesses, it's the sentiment. And sentiment can swing much faster than fundamentals. Yes, there are real concerns out there. Geopolitical conflicts are creating uncertainty. Markets don't like uncertainty. And as long as these tensions continue, volatility is likely to stay. But at the same time, there's also a strong possibility that things could stabilize faster than expected. And here's what experienced investors understand. Markets move ahead of reality. They don't wait for everything to be perfect. By the time the news turns positive, the biggest gains are often already gone. So instead of focusing only on fear, it's important to look at the underlying strength of the market. And that brings us to the most important driver of stock prices, earnings. At the core, when you invest in a company, you're buying into its future ability to generate profits. And right now, the outlook for corporate earnings is actually very strong. Analysts are expecting solid growth across major companies, and not just modest growth. We're talking about numbers that historically support rising markets. Even more important, this growth isn't slowing down, it's accelerating. Over the past couple of years, earnings growth has been building momentum, and when you see that kind of trend, it usually tells you something powerful. The foundation of the market is stronger than it appears on the surface. That's why the current situation feels like a coiled spring. On the outside, everything looks uncertain, but underneath, the pressure is building, and when sentiment shifts, even slightly, the market can move quickly. Now, let's talk about one of the biggest fears investors are dealing with right now, artificial intelligence. AI has been one of the hottest topics in the market, and for good reason. The pace of innovation has been incredible. New models, new capabilities, and new use cases are being introduced faster than ever. But with that excitement comes fear. Many people believe AI could disrupt entire industries, especially software. And because of that fear, we've seen a sharp sell-off in many software-related stocks. But the reality is, AI is not here to destroy these companies, it's here to transform them. Instead of replacing traditional software, AI is becoming part of it. Companies are adapting, changing their business models, and integrating AI into their offerings. In fact, many of these businesses could become even stronger because of AI. And this is something we've seen before with every major technological shift. At first, there's uncertainty, then there's panic, and eventually there's clarity. We're starting to move into that third phase now. Some software stocks that were heavily sold off are beginning to stabilize. In fact, a few have already started to recover, showing that the initial reaction may have been exaggerated. Now let's shift focus to an area that continues to stand out regardless of market conditions, cybersecurity. If there's one sector that businesses simply cannot ignore, it's security. As the world becomes more digital, the risks increase. Cyber attacks are becoming more frequent, more advanced, and more damaging. And here's the key point. Companies are not cutting cybersecurity spending, they're increasing it. It's not optional, it's essential. Recent events have shown just how serious these threats are, with high-profile breaches making headlines and highlighting the need for stronger protection. And yet, despite this growing importance, many cybersecurity stocks have been pulled down along with the broader market, not because their business is weakening, but because fear has spread across the entire sector. That creates an opportunity. When strong companies with strong demand start trading at lower prices, it opens the door for long-term investors to step in. Now, let's talk strategy, because finding opportunities is one thing, but identifying the right ones is another. One of the most effective ways to evaluate stocks is by looking at their valuation compared to their growth. For example, metrics like price to sales can give you insight into how much investors are paying for each dollar of revenue, but that number alone doesn't tell the full story. You have to compare it to the company's historical valuation. What have investors been willing to pay in the past? And then you need to adjust that valuation based on growth. A company growing at a rapid pace deserves a higher valuation than one growing slowly. So the goal is to find companies where the current price does not fully reflect their growth potential. When you combine all of this, current valuation, historical trends, and future growth, you start to build a clearer picture. And what you often find is surprising. Some of the best opportunities are not hidden gems. They're well-known companies that have simply been dragged down by market sentiment. And here's something important to remember. You don't always need to chase new stocks. Sometimes the best move is to go back to the companies you already believe in and ask yourself if they're now available at a better price. Because investing isn't just about finding what's new, it's about recognizing value when it appears. So while the market may feel uncertain right now, it's important to look beyond the noise. Strong earnings growth, long-term trends like AI and cybersecurity, and valuations that are becoming more attractive. Put all of that together, and you start to see a different perspective. This isn't just a market filled with risk, it's a market filled with opportunity for those who are willing to think differently and act when others hesitate. If this opened your eyes, don't just watch, subscribe, and start thinking like the top 1%.